since I became a crypto guy, crypto is really just going down and down and down. Typical.
when hedge funds buy, when hedge
Yeah.
funds
1 minute
buy,
remaining. I'll be beginning with US CPI, Euro.
it's delayed. Okay,
Who sent
so
you that message?
There was another popular investor, actually, some elite guy with like really
Okay.
a lot of copies. I'm not gonna say who, but not me, but similar level. And
Whoa.
he was very surprised that I'm investing in crypto, but for me, it's a short-term trade. Yeah.
Yeah, there is sentiment. There is a, like you trade what the market gives you, not what you want, right? So
CPI about to come out in a few seconds. Brace.
Yeah, so CPI data is about to come out. I'll shout out the numbers as I get them. Expected
Dump it.
is
What's your guess, Nestor?
I think we might come higher. I think we might. I think we might
so
come
too.
higher.
I think so too, because there's a seasonal factor. It usually comes higher beginning
So
of
we're
the
expecting,
year.
yeah, we're expecting 0.3 and 0.3 in core and 2.9 and
3%,
3.1.
3% higher than forecast, 2.9%.
3% higher than expected.
5%, 0.5%.
Very
Core comes in higher than expected.
Core CPI year
Wow.
over year, 3.3%.
This is the markets are not gonna like this at all.
Higher than forecast, 3.1%. Core month over month, 0.4%, 0.4%. Higher than forecast, 0.3%.
I think everything's
Looking
going
to the
to sell
markets
off
here, a bit of
today.
whipsawing in the S&P, strength coming through in the dollar. Now some weakness coming through in the S&P 500.
Yeah.
Wow,
So
my
it's crazy.
portfolio is
Yeah.
dropping.
Yeah. The market's gonna drop.
Again,
Like,
CPI
well, it's gonna drop like a
here,
brick. But the thing is like, I don't think
hotter
this
than
changes
expected. That headline
the
month over
overall
month
market,
at
right?
0.5% on expectations.
Changes everything, my friend.
0.3%. Again, S&P 500 seeing some weakness, dollar
Wait,
seeing
are
some
we
strength
live?
there. Treasury yields
Yeah.
jumping
We are
after that
live both
inflation data.
on
10-year yields
YouTube
last
and on
up around
Twitter.
6.1 basis
I'm
points.
trying stuff out. So say hello, people. Say hello.
It is
Keep in mind,
changing
we are still
everything, but
waiting
it's
on
not
the
changing
supercore
in the
CPI
sense of
calculations
changing.
to
It's
come through as
more
well.
in the sense of delaying. It just delays everything.
It delays the cuts, right? But
it absolutely delays the cuts. Employment is strong, right? There's no weakness in the labor market. There's no weakness in the US economy, the consumer
Traders
behavior.
pricing in less
Inflation
Fed
is
easing after
high,
the CPI
so
reports again. Traders pricing less
rate
Fed
cuts
easing after
are
the
off the
CPI
table.
report.
That's a certainty. I don't know if he will hike rates again. I think they will try to wait as long as possible, because if they hike the rates again, they acknowledge that they made a mistake. And Powell is not this kind of guy that acknowledges he made
Europe
mistakes.
stock 600
right?
falls sharply
He's
as well
still,
after the negative US CPI
there was
figures.
a
Last
Senate
down
hearing
spot 3%.
yesterday.
Treasury 2-year yield spiking.
The
last up
banking committee
8
of the
basis
Senate
points.
that were telling him, do you regret having printed 40% of the dollar supply during COVID? And he was very clear that he absolutely does not regret it. He would do it again. And he's not the type to acknowledge mistakes. So I don't think they will hike rates. For me, it's off the table. But they will also not cut. Maybe till the third or the fourth quarter this year.
As well.
And that's not good for crypto. It's not good for
5%.
tech stocks. It's not good for risk assets.
Yeah. Well, okay, let's start the episode real quick. We just received, ladies and gentlemen, we just received CPI data and it was ugly, higher than expected. The S&P 500 is expected to come down. U.S. stocks are going to be hurt from this. Crypto is going to be hurting too. And the U.S. dollar is likely to increase and yields are likely to increase as well. The market does not like this and is expecting cheap money quickly. Trump just stated that he wants interest rates to come down, but Trump seems to be all bark and no bite. So in this episode of Market Buzz, we're going to be talking about CPI, Jerome Powell, and the Trump effect. How can we take advantage of the Trump talk and try to make money in our portfolios and adjust accordingly? Because this is a trader's market. It's not an investor's market. So everybody, welcome. I have a Kim and Timothy, popular investors from eToro. I'm one myself. Check out the portfolios if you like. And yeah, this episode is sponsored by us. So hope you like it. But yes, so let's get started first, right? So CPI comes in higher than expected at 3%. What does that tell you guys, right?
To be honest, the data, I mean, it's hot as it can be. Yeah, it's 0.5
So seeing the release of the
month
US
over month.
Supercore CPI
On
calculations
an annual
now as well,
basis,
month over month
0.5
at
is
0.75.
6% inflation. Of course, the next month are not going to be that hot, hopefully, but the 0.5% month over month in the CPI, 0.4% in the core one, if you remove energy and food, is just too high. Markets need 0.1, 0.2 to expect rate cuts. The labor market is strong. The US economy is strong. The consumer is strong. But inflation is hot, so there are not going to be any rate cuts in the foreseeable future. So it just makes sense that the risk assets, tech stocks, crypto, they will continue to have really strong headwinds in the next few months. And the story with the tariffs, where all the products are going to be 10 to 25% more expensive, this is not a good thing for inflation. So don't expect monetary easing in the next months. Maybe closer to the end of year. Maybe we're going to have an amazing Christmas rally. It's possible, and that's my base case. So that's how I position myself. It's a good time to accumulate, but don't expect to make a lot of returns in the next month. I think it's going to be very, very choppy, and we're going to move sideways for some time.
Timothy,
That's how I see it, at least. I don't know if you guys.
No,
how do you position
I agree
yourself?
partly.
Yeah.
I agree partly for sure. You know, it'll be interesting to see how Trump comes into the equation now, because this might be the first failure of his presidency, right? One of the promises he made was day one, prices will come down, and nothing has come down. Everything's starting to go higher. We're starting to see a spike in inflation, which is what hedge funds are freaking out about. That's the reason we might see markets down today, right? But Timothy, let me know what you think.
Yeah, I want to stay a bit positive because, like you said, I want to see what Trump is going to do. His measurement of his presidency will be the stock market. So, how the stock market performs will be his legacy. So, in my opinion, he will do anything he can to lower rates. Not sure how he's going to do it, but I'm sure he's full of surprises. So I want to keep the option Trump as something positive and not only negative because he induced tariffs, etc. Yeah. So that's what I think.
Those things take time, in my opinion. And for now, everything that Trump has announced is inflationary. There's nothing deflationary so far in Trump's policies. Tax cuts, tariffs. So it's a little hard for now to see any hope for inflation to come down. And we're a bit in an interesting scenario where the whole world is easing, right? There's a lot of liquidity now in Europe and in Asia. And in the US, we're still tightening, right? So maybe there's some opportunities here, ex US, possible.
Well, a lot of
Something to
people are
consider.
calling for Europe to pick up the pace, you know, but I do find that the biggest issue that I have, it's usually like, and it comes back to this saying where when the US coughs, the rest of the world catches a cold, right? Because everything goes to the States. So I find it tricky that potentially we could see Europe picking it back up, the UK picking it back up, even Japan. I was actually looking at some of the data, and we were expecting Japan to present some results tonight at 12 p.m. And PPI is expected to come up 4%, you know, which usually Japan and inflation do not mix. Like Japan has been almost in a deflationary state for so long, right? So this brings in the carry trade. This brings in the like inflationary fears. It brings in a lot of catalysts that we've had in the back, and we just put in the back burner because they were not there. So the sentiment is starting to shift, and there's been a reason why we are in this sort of range in the markets right now, which is scary, you know. So Trump definitely has a job, like a hard job in front of him. Hopefully he manages to figure it out, but with the way that he's been trying to play it, you know, like America first and everybody can support me, otherwise you can go burn in hell, does not work, right? Like It shows weakness more than anything else. It shows I'm scared of the rest of the world, therefore I'm not going to work with you guys because I want to be the best. You know, it's tantrum politics. You know, it's outrageous. So far,
Yeah.
this is something that's gonna tell me.
But there where I agree with Timothy is that there is reason to keep some optimism. It's just this optimism is delayed. Don't expect to make returns in the next few months. It will take a bit longer, but see it as a fantastic time to continue accumulating, because we have the most pro corporation and the most pro crypto president and administration ever, right, in the history of the US. So we have really a strong base here to as Timothy said, for Trump to leave the stock market much higher at the end of his term than at the beginning. Just is going to take a lot longer. It's not going to start, I think, this month or even next month. And we've seen this. The markets are incredibly resilient despite this geopolitical circus and the inflation headwinds. We're down not even 1% in the pre-market. Let's see once the market opens. But since the beginning of the year, everyone has been buying the dips. We've been buying the dips every time the S&P dropped below the 6K. They bought the dips and went again above the 6K. And I think this is the narrative at the moment, is buy the dip.
No, I agree with you for sure. I mean, it's gonna be buy the dip, but it's like be selective in what you're buying. You know what I mean? Like that would just be my 2 cents on it, you know? Because with Trump, you never know if he's all of a sudden gonna go in and be like, "Hey, you just bought? How about I set up some tariffs on chips?" you know, and all of a sudden it's like, okay, so my margins are dropping, you know, and all of a sudden we don't know. So it seems like right now the market is playing, you know, and this is I want to touch on this a little bit, and I want to get your ideas on how you're potentially looking at this.
By the
So
way,
what is the Trump? How do you deal with Trump?
Tariffs,
right? So
tariffs on chips.
In chips, or you know,
sorry, I was just saying tariffs on chips. Tariffs on chips is not bad for chips. We saw tariffs on steel. All the steel makers went up like crazy, right? The U.S.
for
steel
American
makers.
steel, yeah, for
and,
American
if
steel,
you have
for
tariffs
sure.
on chips, right? Exactly.
Yeah.
And it's the same for chips. If there are tariffs on chips,
Yeah.
you know, it's good for Nvidia.
hopefully. But let me ask you this. So this is the way that I want to sort of like continue to think. So if we're looking at sort of the micro, right? So when Trump says, because that's an interesting perspective, Akeem, right? So if all of a sudden Trump sets up tariffs on different products, right? How do you trade that? Because it shows, at least with steel, that you are getting protectionism for American companies, which in the short term should benefit them because it makes them more competitive.
Yeah, absolutely. I mean, in the short term and even in the longer term, it protects US companies. It's not good for the US consumer. It's not good for inflation. It's not good for monetary easing. But if it's not going to be, if you cannot rely on monetary easing, you have to be friends with tariffs. If you cannot be friends with Powell, right? If Powell doesn't want to be your friend, you have to be friends with tariffs. So you need to think as an investor, if you're a short-term or medium-term investor at least, even if you're a longer-term investor, you need to think about having a portion of your portfolio allocated to assets that are actually going to continue going up despite Trump's tariffs and despite his policy of us against everyone in the world. So, for example, in my portfolio, I have First Solar. It's a solar stock. Intuitively, it's not the stock you would choose, right? Because Trump, he doesn't believe in climate change and in renewable energy. But the fact is, the US have been using more and more renewable energy, and his tariffs are going to favor US manufacturers of solar panels. So this is good for First Solar, but also for steel makers. So you need to think about all these sectors that may benefit from Trump. And we saw it since the beginning of this year. I've never seen the Dow so strong. You know, the Dow index. It's the one with the U.S. manufacturers concentrated. The Dow is really strong and very resilient, and has outperformed the S&P and the Nasdaq in many trading sessions. And I think you need to think a little bit to allocate a portion of your portfolio in this Trump term where he will want to leave a legacy in US manufacturing, to some US manufacturing stocks. So I have Boeing, I have First Solar, and you need, I think, to allocate a portion of your portfolio there.
Okay. Yeah, I hold First Solar too. I like it. Like if the solar industry is at the bottom of where like at least my expectation is, like 160 seems a really good price. But yeah. Timothy, what do you see? What do you see about Trump? How can you benefit from the Trump bravado? You know what I mean?
Yeah. So if we look at his past presidency, stocks that went up a lot were also the military stocks, and I haven't seen any military stocks right now pumping. So I'm watching stocks like Lockheed Martin. That's also a white mode company that will continue to make good money out of the US and even outside for growing their company. But these things, like Akim said, they can take time. So what he means by now is the time to accumulate, you don't have to buy the things that already went up 20%, 30%. You have to look for those companies that will likely to go up whenever Trump he tweets one thing and you know he's gonna shut up 10%. So when he suddenly tweets something about China or going to war, you'll see LMT, Lockheed Martin, fly higher than Tesla's rocket ships. So definitely look for those companies. Myself, I'm more into tech. So what I love about tech is, yeah, they have high margins. They can just scale over the whole world. um, Tariffs, it won't impact them too much, in my opinion. They don't sell goods, you mean software. It's something you can just sell to people on a monthly basis. I like these companies. So companies that are with a wide moat and can scale over the whole world will continue to do well. So these are the companies that in my portfolio are recession proof. They won't lose money if for example, there is a recession and the public doesn't have money to keep buying. So in my portfolio, I have checked, and most of them are well established companies that don't really have issues with those new tariffs. Maybe Nike, because it's a lot of manufacturing in China, and also a bit of Apple because they get a lot of their products from China. But besides that, I think my portfolio is pretty solid against it.
Something interesting that I heard in the popular investor meet that we had yesterday. This was a crazy statistic, and it's like for every 10% the US dollar goes up, it affects S&P earnings by 3%. Or am I reading it the wrong way around? I wrote this down. Give me a second. So 10% up in the US dollar means a 3% decline in S&P 500 earnings because of the international exposure that they hold. So that's something super interesting to pay attention to, because the US dollar might become a really good trade. You know, it's like just holding US dollars for now. Like the dollar continues to get strong, and if we're not getting any cuts while the rest of the world is cutting, might actually really be a really good trade. You know.
This is the major headwind, in my opinion, for stocks and cryptos to go up, is when you have the US dollar paying for something interest in your bank account, while the euro and the other currencies, they pay almost nothing. It's very hard to convince investors to sell their dollars and to go and look for returns in cryptos or stocks. In 2021, during COVID time, the dollar was extremely cheap. It was paying zero interest, right? It was a zero interest time. So investors were like, okay, where can I make money? And the answer was, the riskier the asset, the more money you make, right? But now it's not the case anymore. The safer the asset, the more money you make. And this is a little bit, it's a bit of a paradox, and this paradox will continue. And so, as Timothy said, and as you also said, Nestor, continue accumulating, but be selective. Don't go all in something super risky. Even though at the moment, the lower the risk, the higher the return. But I think this relationship, this abnormal relationship will change when inflation comes down and monetary easing takes place, because in my opinion inflation will come down. We have real long-term tailwinds for inflation to come down, and the main one is called productivity. With AI, we haven't mentioned AI. We on this episode now, what we're talking since 15 minutes,
18
we didn't use
minutes,
the word
18
AI.
minutes without saying, and
18 minutes.
it tells you, it's tell you
So
what's
I'm
happening
a
to
little bit.
sentiment, though. You know, that tells you what's happening to sentiment. It's like you got to broaden out your spec, your field of view now, because if you don't, you end up making the mistake of being like, oh, the thing that has been paying 40% year on year for the last 3 years is not actually giving me that anymore. So it's like, you know, what are we expecting, right? S&P 500 is expected to give you 8% to 10%, including dividends given out, right? And we like for the last 2 years, we've been what, at 20% and higher? You know what I mean? So the reality has to set in at some point where it's like we need to normalize the earnings, we need to normalize the returns we're getting in the indexes, and this might be the time that we just hold steady for the next upside, you know? So something to take into
Absolutely.
consideration too, because many people are used to, you know, many investors that have just jumped into the markets are expecting, oh yeah, 20% on the stock market is normal and there's no risk, you know. But the higher the upside, the higher the volatility expected in the asset class. Like Nvidia did lose $600 billion worth of market cap. You got to be able to stomach that in order to get those returns. That is the reality of investing, the reality of risk. It doesn't come without it. You know what I mean? This is the downside potential that you see in the asset class, you know? So
we've seen a perfect relationship between stock market returns and the treasury yields. When the treasury yield goes up, the stock market returns go down, right? And now the treasury yields just keep going up and up because the US is expected to need to borrow more and more money. So as long as we don't see a reversal of the treasury yield trend, the market will stay choppy. Also, something to keep on the radar is the treasury yields. It's not sustainable, a treasury yield at 5% for the stock market to continue going up.
the thing is like if we look at it historically, the interests are not even crazy high, right? Like at 5% returns, like in the past 10 years, sure, it's extremely high for the past 10 years. But if we look at the last 100 years, we're still under the average, right? So that's where potentially is like the companies that I see getting hurt in this are the companies that like the small caps, right? Like the longer we stay higher, the less these companies can make a return. Their returns are going to be, they're usually in the negatives. So they're going to be even more negative because they got to pay higher interest on debt that they have to continues to use in order to run. But the big tech companies, funnily enough, have a ton of cash in hand. Like right now, I think it's like, I think you make less money letting Apple borrow money than the US government. You know, so it's like,
so Nestor, what you're saying is with the high treasury yields, you should go and buy the Max 7 and stick with them. I mean, the Max 7 were the main driver of the returns in the last 2 years, so you expect that to continue.
I'm expecting them to survive in the worst case scenarios, right? Like, and then I'm expecting very few companies in particular sectors to benefit from the current situation. So be very selective. I'm not buying the IWM. I'm buying individual companies that I truly believe in, and I see that they are the best in their sector and they are outperforming and creating value in a way that nobody else is, right? So You know, like I'm definitely keeping a very close eye, and this is opening up the opportunity for companies, such companies, to actually be invested in, because all of a sudden PE ratios are coming down, fundamentals are coming down, so you're getting really good opportunities. This might actually open up the opportunity for investing in Europe, for investing in China, right? Like Alibaba with the DeepSeek advancements is starting to look more and more appealing, right? So we have those we have those companies which in reality are like starting to open up the somebody knocked. So these companies are starting to open up pathways in order to, okay, let's start diversifying the capital, maybe start looking outside of America now that these companies are potentially likely to dip even more, and then find those opportunities, right? So analysis is going to become extremely important. Trump is going to make you work. You know?
Do I have time to ask 2 questions?
Sure.
I just need a quick answer from you. Yeah.
Can.
Which stock sector or which sector in general in the market would you buy now, Timothy?
Yeah, I've said it before.
You mentioned defense,
healthcare.
but is
No, healthcare is the one I'm buying the most right now. It's very undervalued.
Okay, could you tell us a few words why?
Yeah, it's very undervalued compared to the stock market in the last 2 years. And when it reaches this point, usually in the upcoming 2 years, it will start to outperform the S&P. It's just based on statistics. So I'm now accumulating more healthcare sectors stocks to benefit from this reverse, actually.
So it's a statistical trade. Let's call it this way.
Yeah.
Nestor?
Right now, I like chips. You know what I mean? I like chips. I like chips. You know what I mean? This year, like I like chips, and then I'm slowly trying to find the best AI play. In all honesty, that's what most of my time is being spent on, because I do think that the software plays are going to be an interesting one for 2025, 2026, but it's going to be like the dot-com bubble, where it's like a lot of companies, just because they say AI and it's like we are using AI, and it's like they're using a chatbot to like talk about in their emails, and that's the AI uses. So you have to really dig deep and see, okay, like what software is actually creating the most benefit, you know? How can I take advantage of this? Like, and then how does it fall within the big sector? So companies like right now, I want to say, like, you know, it's like I still don't have those software companies where I can just be like, okay, like these are the companies that I would implement in my company. So it's like it's difficult. But then chips are gonna benefit. I think the AI revolution is not going anywhere. I think that, but again, it's time to start looking at which chips are actually gonna benefit. So we're talking about, are we going ASICs or are we going GPUs, right? Is Nvidia or Broadcom gonna be the beneficiaries in here, right? Who's gonna be the winner out of this? What's the way that we're implementing all of this technology into the data centers? Data centers are gonna be massive because you're gonna have companies have to compete for this. So I'm definitely paying attention to chips right now. It's where I'm at. Like I'm right now in an SMCI trade because there was value there. I don't know how long I'm gonna hold it for. The Nvidia trade that's coming, I think earnings are gonna blow it out of the water. SMCI just told us that they're expecting to grow almost 60% year on year, and Nvidia continues its massive growth and massive numbers, right? So I'm definitely paying a lot of attention on those, and then I'm hoping that that sector continues. But it's innovation, you know. It's right now the race is who's going to be there first and who's going to acquire all of the customers in order to make them reliable on that. Now I want to hear yours, Akeem. You know, what sector?
Mine is very easy actually, and it's not a specific sector. It's literally anything that has a stamp made in USA. So
Okay.
it can be a crypto from a US crypto firm. It can be a US defense stock. It can be US anything, literally, but just made in USA. And I think you have real headwinds there for anything made in USA. So I think this will outperform with the super pro corporation administration that the US has. Europe, unfortunately, we cannot say they have a very pro corporation administration. We have a lot of bureaucracy, and I think it's not where the innovation will come from. China, the Communist Party doesn't like when corporations get too big, or when certain companies grow too quickly or get too innovative. But not just that, also you don't have reliable information available. So we saw the saga with the DeepSeek that shaked the markets and shaked Nvidia and all the US stocks. But the fact is that we don't know whether it's true or not that DeepSeek doesn't need as many Nvidia chips. Apparently, they need a lot more chips than what they said at first.
Well,
so
I've
for
got
me,
some data
anything made
that's
in
gonna blow
Europe.
your socks off on that. Like that's an episode of its own. The DeepSeek saga with Nvidia and the reality of the chip mania that is happening in China.
Absolutely.
It just tells me that people want to buy
Absolutely.
chips at no matter
But
the price.
I think anything made in USA is the theme. So I had a second question, if we still have time. We mentioned the winners. What are your losers? The ones that you're absolutely avoiding and don't want to touch before you. Maybe we can start with Nestor this time.
Timothy, do you have an answer? Because I gotta give it a thought.
For
Because
me,
I'm willing to
no-go
touch
is
anything at the right
absolutely
price.
the auto sector and the airplane sector are two sectors I'm not willing to invest in. It's already something I won't be investing in before Trump, but now that he increased tariffs for those sectors, I believe it's even more riskier, even more cyclical. So personally, that's something I'm avoiding.
You stole my answer, Timothy. My answer was almost that.
It's a good one. It's a really good one.
Really, I would have said avoid anything that is capital intensive, so that requires a lot of capital, because capital is very expensive currently compared to the rates we had in the last 10 years. So this will take time for companies to adapt, but also for airlines, especially for airlines, commercial airlines. You have a second challenge. It's more than a challenge, it's a big problem. It's the cost of fuel. So you have the debt is costly, and they have supply chain disruptions, and the cost of fuel is high, and people don't want to spend as much to fly. They don't want to spend thousands for a flight ticket. So there is some a lot of airlines already mentioned it in their earnings releases. People are not so willing anymore to spend more on flight tickets, and they're looking for alternative ways to travel. And that actually benefits Airbnb and the cruise stocks. There's a reason why the cruising stocks are booming, is because people are like, look, $300, I have an all-inclusive 1 week in the Caribbean going from Florida, but if I want to fly to Italy from the US, it's going to cost me 2K. No, I'm going to the Caribbean for 300 for a nice week. And this is the reality now, is be very careful with capital intensive stocks and the ones that suffer very quickly from high inflation.
Okay,
what about you,
Akeem,
Nestor?
so what I'm hearing from you, Akeem, what I'm hearing from you, Akeem, is that the market bus is gonna be going to a cruise this year. This is the news. You heard it here first.
This is the news. We will go all together.
Nice.
And
nice.
hopefully the Toro Popular Investor Summit. Hopefully the summit will be on a cruise this year.
Yes, Yanni. Huh? Get him to approve.
Nestor, you losers. You cannot avoid the question. I want to hear your losers.
I gotta do it.
I know you are ultra optimistic. I know you think that you can make money everywhere, but
the thing is just like you can make like I'm never a loser. So yeah, so I can like I'm not against any trade. You know what I mean? That's the beauty of it right now, right? Like even SMCI, I wanted to short it, now I'm buying it long, right? So it's like
I knew you were
things
going
that
to
I'm
say
staying
it.
away from. I'm paying attention and I'm taking so I agree with the car sector just because of the debt crisis in America. It's a very something that's very pungent in that sector. But I would say like international oil would be the thing that I'm like getting a little bit scared on, and it's because of we are seeing a slowdown.
What are you talking about?
Like I'm talking about like the Shells, the BPs, right? Like we're talking about oil in this case, right? Like drill, baby,
But
drill.
those are amazing companies.
Yes, but what we're seeing with and the thing is like I'm thinking long term, right? Like I'm thinking in the long term aspect of it. The thing is like we haven't seen any major moves on them. You know what I mean? It's like, yeah, they're solid, they're steady, but I think that they might get hurt if we see a slowdown and we see some sort of separation from America, right? And all of a sudden we go into this peace world that Trump wants, right? Where it's like oil is just going to be abundant, and then all of a sudden drill, baby, drill, right? In the next 4 years, hopefully, like I think the whole sector is a little bit skeptic in investing more in oil, but I think oil might actually get hurt in the next couple of years. You know, the more oil supply, and if demand doesn't continue to go up, and I don't think we will see demand continue to go up because we're looking for alternative energy. I could be wrong. Again, like the thing is like you give it to me at the right price, I'm willing. But I think what? Like I'm heavily invested in Shell. That being said, I'm heavily invested in Shell, you know? But at current prices, would I buy more? No. Right? I would stay away from it. I would look at other places in order to make money. I would even look at banks, like financials, right?
Nestor, not selling is buying. So you're
but that's the thing. I'm considering the problem I have with it is that the capital gains that I would have to pay on that position are massive, and I don't want to. You know, I don't want to pay the capital gains. I don't want to pay the capital gains. So that's why I'm holding. It's like, because I don't think they're going to drop that much, but I don't think they're going to move either, right? So it's like, it's a balance, right? Again, I just think like if I have to say no to a sector, you know what I mean? And potentially like, like, you know, just to add something. But the thing is like if oil drops and we see oil starting to come down, and all of a sudden the economy start getting better, like I'm willing to change my mind that quick. Like if the fundamentals change, I'm willing to change it.
Nestor, if I may, respectfully, and you can cut this part of our discussion, but
that's okay.
You actually completely contradict yourself. If you take the winner, your winner, and your loser, it just doesn't go together, because your winner, you said, is AI infrastructure, and AI needs so much energy. A huge amount of energy.
Agreed, so but I don't think the energy is coming. I don't think the energy is going to come from oil. I don't think the energy is going to come from oil. I don't think the energy is going to come from oil.
It takes time to transition away from oil. So you cannot say that oil is going to be the loser this year, if you believe in AI.
Akim,
do you see oil demand increasing this year? Okay, we're talking about this year. I absolutely
see oil demand increasing.
The year?
I absolutely see it increasing this year. The US economy is strong. India is growing like crazy, and India is relying on oil. They don't believe in solar panels or whatever. They tell me one big economy that is shrinking and that is consuming less oil. Even Europe needs more oil and more LNG.
Yeah. The thing is, like you know, it's like the thing is just like, look, like right now, if I have to put money on it, I said oil doesn't move this year. I say oil doesn't move. If I have to put money on it now. But that's like, how can I say this? Like, it's based on very little research, very little analysis, is to give you an answer more than anything else, right? So that's the issue. You know, that's the issue. But I mean, like, do I see other companies doing better? 100%. But would I buy, for example, on my eToro portfolio, would I buy oil? No. You know, I don't think oil right now, it's like, even potentially nuclear, if we get the right advances. Solar, I think solar benefits from the AI revolution. You know what the problem is with oil? The thing is just oil, like I think, and I might be wrong on this, so don't quote me, even though this is going live. The problem that I have with oil is that the current infrastructure of energy it's such a slow moving thing, right? As such a slow moving industry, you're not gonna get that boost in order to be able to say, okay, like let's start the generators back up. Let's all of the no, you usually are gonna need energy where the data centers are gonna be. So we're thinking nuclear, like small generators, probably is gonna be the thing that wins. Solar to like create a baseline somewhere. You know, but the thing is like we run into the same issues that AI is running, which is there's too much demand, not enough supply. And I just think that the American energy infrastructure is not strong enough to actually just increase the demand of oil in that way. But I could be wrong. I could be wrong, you know? Like I would invest in oil if prices come down. But right now, Shell sitting at 32, 33, which is like my barometer for the industry, you know?
And
I would try to
Akim,
stay
I
away
had
from it.
one question for you.
Total sense.
If there's time.
Tell me.
Yeah, Ethereum is made in
Tell
America,
me.
so that means it must go up this year.
That's why I came as a crypto junkie now.
It's made in Canada.
Oh.
the founder is a Canadian, right?
It's not the US.
So you know, Canada is not American yet. No, but Ethereum, I have high conviction in Ethereum. Jokes aside, and a lot of US investment firms use it, and Trump is invested in Ethereum. But I think it's at an accumulation phase at the moment. In my opinion, is worth continuing to buy ETH. And once we have rate cuts back in the horizon, we saw the amazing rally we had at the end of last year. That's because Powell said, yeah, we're going to cut rates and inflation's coming down. And we had rate cuts in the horizon, right? So markets were expecting rate cuts. You don't need to actually see rate cuts. They just need to come back into the picture. Now they left the picture, right? Crypto is resilient, in my opinion. ETH is at a crucial support, is holding. BTC is also super resilient, is at 90K. But the rate cuts need to come back into the picture as a possibility in the next months, right? So, and I expect the rate cuts to come back maybe in summer, as soon as inflation is going down again, or labor market starts weakening, or the economy starts weakening. You don't even need inflation to go down. Inflation at 3% is fine. Actually, at current level is great. If you start seeing the economy getting a bit weak and the labor market getting a bit weak. So in my opinion, it's a good accumulation phase at the moment for ETH and for BTC. Yeah. And I know, Timothy, you're also invested in crypto. You also believe in the case here.
Yeah, but I don't monitor the rates to buy crypto. I just look at the chart, you know, and most of the crypto charts I'm in are really good. But then you look at altcoins like DOT or AVAX, and I mean they're done tremendously against Bitcoin, and those are not the coins you want to be holding. And to be fair, if one of my coins starts to underperform Bitcoin again or even Solana, I will cut loss and just move on to the stronger ones. So, like Nestor said in the beginning, this is a trader's market, and especially for altcoins, I don't think it's working out to just buy and hold. I mean, why are you holding fundamentals? But there's 10K coins launching every day. So why isn't the coin neighbor launching or going up 20x? Why should your coin go up? So you have to listen to what the market has to say, and then buy into that trend actually.
Yeah, I think right now taking profits when something rallies like crazy, like moves like Intel, moves like SMCI, moves like in somewhere in Bitcoin where we could get 110K again or something, moves like that, you want to sell a little bit of your position and have some cash ready to deploy because there's going to be opportunities to get in and out. Like, if you get anything out of this, I think that's my take at least on, you know. But yeah, cool. I think we touched on anything, guys. That's everything. You know, anything else you want to add? Akeem,
No, I think interestingly, we're all a bit on the same page. I think we now just need to continue being selective and buying good stocks. We're not. I think we're not going to have a fantastic February or even a fantastic March month in terms of stock or crypto returns. But I think it's good. You have to keep buying the dips of the assets you believe in, and better times will come. We're absolutely not in a bear market. We're in a bull market. We're still in the bull market, but we're really in the accumulation phase, in my opinion, of the next leg up.
Yeah.
But then for next year or in 2 years, that's another story. I can see a bear market coming, but this is a topic for another episode.
Yeah, for sure.
We're still in an uptrend overall.
Yeah, if you look at the long-term charts, Bitcoin and S&P, I don't understand why people are so fearful, or why they say the market is bad when it has been going up since 2022. So it's
Bitcoin is at a
tremendous.
90K. Bitcoin is at 90K. Nvidia is sitting at 130. It's like, yeah, it's not the 150 we were at. We're cooling off. But it's like, it's like, are we in a bear market sitting at all-time highs? The S&P 500 is sitting at all-time highs or close to all-time highs. The Nasdaq is sitting close to all-time highs. Like, what are we talking about here? You know what I mean? Like, it's just.
Do you see my screen? I have here the Bitcoin chart.
Yes, correct.
Are you guys seeing it?
Yeah.
Look, we have a tiny dip here, tiny one, and everyone is losing their minds. Yeah, tiny one.
Yeah.
Right, but if you zoom out,
you know why?
Amazing.
Everyone is in altcoins.
In an uptrend.
That's why. Akim, that's the reason why everyone is
but even
so sad. It's because everyone is holding altcoins.
Even if you go in altcoins, I think ETH is a good representation. You can see that we're completely in an uptrend still. Yes, we're going to test this support line that you can see here, right? Every time it dips, it hits this support line, and we're at the support line, and I think we're at the perfect phase to continue buying altcoins. But of course, it needs to be within a diversified portfolio, in my opinion. Don't go all in, and you'll be fine. And the same is with NVIDIA. If I show you the NVIDIA chart, if I show you the Apple chart, if I show you Tesla chart, yes, they're all the same. They were up crazily since Trump's election, but in the last few weeks, yes, there's been dips and dips, but keep buying the dips, in my opinion.
Yeah, many people like to think that the presidency is just like, I'm able to just change the whole world with a click of a finger, and the reality is not even Trump can, right? I think this shows as the CPI data today shows as Trump's first failure, or maybe the second one after he couldn't get the tariffs out of China. But maybe that's what he wanted all along. So, but the CPI I think is going to hurt him because it was one of the promises.
Look, Trump started January 20th, right? January 20. The CPI data is for the whole month of January. And I don't think whatever Trump did since January 20 had any impact at all on the CPI. I think the reason is not Trump's policies, but it's because, there's a bunch of different reasons, but I think it's because a lot of companies and a lot of people were buying like crazy stuff that they were afraid were going to be hit by tariffs. And that's why inflation went up. Because suddenly steel got more expensive. A lot of things got more expensive ahead of the tariffs, ahead of the news. So when the tariffs come into force, I think you're not going to
see that
impact anymore at the time it comes in force, because because now the company is already pricing in the 10 to 25% tariffs. And I think this is what we saw in January, because since November, we knew that he was going to put tariffs in place. But also beginning of the year is usually when a lot of employees get promoted and receive more money from the companies and their bonuses paid out, consumption is higher. So it's also, there's a seasonal factor where inflation is hot. I personally never believed in 0.2 or 0.3 month over month CPI. 0.5 is also higher than I thought. I personally thought it would be 0.4. But in my opinion, inflation will come down with time despite tariffs, because one single president, I don't think, has that much of an impact.
Yeah.
Anyway,
that's for sure. That's for sure. Well, interestingly enough,
that's just an opening to the.
Yeah. I think that's it, boys. I think we cut it here, and I think I might actually make a couple of videos out of that. But let me just stop it. I don't know if you wanted to say something else, Timothy.
No. It's okay.
Go. All right. So Akim, we got to figure out a way to get your internet on point.
Why? What's happened?
Because you're very pixelated.
Lagging.
Yeah. You're lagging a lot. But the thing is, it's because I increased the settings. Yeah, I increased the settings of the recording. So now you are like, the final video is going to be at 1080p. So your camera is going to come in a lot better. Hopefully, we'll see. But yeah, now you're better. But the thing is you had your computer. This is heavy on your computer.
No, you should have told me before, because again, I have the most advanced MacBook Pro. So
no.
I just turned off now the Wi-Fi on the phone, and I think it was maybe interfering a little bit with the internet on the computer.
Okay.
But
so no, what I'm thinking is, but the thing is the final video is gonna come fine, but then the stream comes in a little bit worse. But that's okay. You're good.
Yeah. But next time I turn off all my devices, maybe the Wi-Fi is a little bit not so strong, because I check my phone while talking, because I check the charts and everything, so that's a bit heavy maybe on the Wi-Fi.
Cool.
But next time I can turn it off, because you told me the same, I think, last time. But I see myself like it works really good. It just
like that's the thing. So your camera, how it looks on you, it looks on the video. But I also increased the setting. So usually we were recording at 720. Now we're recording at 1080. So we'll see what happens.
And Nestor, the Riverside can make shorts, or do you make those shorts?
So the Riverside gives you the baseline for the shorts, and then my brother edits them. Right? So I'll show you. Like I'm actually quite down to sit down with you guys one day and then just walk you through the process on how to use it on your own projects and how to actually do all of the editing. It does it for you.
Yeah. So, or if you make a short, you can send to it to us, and then I can share it in other places.
Yeah. Also can do.
With the link.
Also can do. Because like that's something that I want to do potentially, is kind of like automate all of this process. It's a very time consuming at the beginning, but then it becomes so easy, and then we're just able to just pump out content every day. That's what I'm hoping for. That's what I'm hoping to get to. By the way, we're live on Twitter and on my channel.
Still?
Yeah.
All right.
By the way. Yeah, Akim, don't talk about your Farcoin holdings. I know your people. The extra dollar you gave me, I'm gonna buy Farcoin with it. I don't know, you're gonna be the owner of Farcoin. Oh man, no, but it's good. It's good, guys.
If people wanna buy a meme coin, they should buy Risky.
Risky. It's all about risky.
Sounds risky.
It sounds risky, So make sure there's risk. It's risky to buy. Oh man.
What is Timothy? What's the market cap now of your coin, the Risky coin?
7K. It hasn't moved since Nestor bought.
So it's a stable coin. I think it's safe to say.
Yeah. It right now is better than any coin.
Hey, it's true. It's very resilient.
You know what I was surprised on your. You know what I thought you were gonna say, Akim? I thought you were gonna say, you know what you should buy? The best investment is gonna be a treasury bill. The 10-year treasury is the thing that's gonna pay the bills.
I hope I don't sound like a conquistador, but it's kind of what I said, right? With the yields at 5% is very attractive.
It is though, you know. It's super interesting because like I have a feeling that if we do like, for example, like you know, like the $1,000 challenge, choose a stock for 1 year, and I think you choose a treasury and market collapses, you make money.
I think when you do this kind of bets, you either have to go with the treasury or with like the craziest crypto. No, if you want to win,
it's trading.
If you want to win a bet like this, you know, it makes no sense to put it in the S&P. You have to choose one or the other extreme.
Yeah, we have Jorge in the chat. Anybody wants to tell him to get out of his shirt?
Which Jorge?
eToro Jorge.
Ah, Perilla.
Yes.
the perma bear, the US perma bear.
Yeah, as you know, he greetings from the eToro's biggest bear.
You know, he reminds me those frogs. I respect him a lot, and you know he's my friend. But he reminds me of those frogs that hide in winter and they come out when the weather is better. And he's always there when the markets drop, but when the markets are rallying, it's completely offline.
It's time to sleep today.
Suddenly, the time zone is a problem to talk to him. So.
No, but it's good. It's good. Like I always like the opposite.
So hello, Jorge. I hope he's listening.
yeah. I think he is. But yes, like that's where, you know, like I've been the one. Like it's funny because if you ask the group of investors that I hang out with, I'm the Nvidia bear. Like because I'm always trying to look for the chinks in the armor. Yeah.
No.
It's crazy. Yeah. Like in the group of friends that I have,
No way.
like I am the Nvidia because I'm always trying to be like, okay, like how can this go wrong? What is the things that I'm missing? I'm always because they're super like Nvidia, you know, you just gotta trust you're the right path. And I'm like, no, the right path. I need to know the answer. I need to understand. I saw the Lex Friedman, and if you guys get a chance to watch that, watch it. It's 5 hours.
But I don't believe you can be critical on Nvidia unless in that group there is Jensen Huang and you. Then yes.
Oh man.
Because you're the second biggest believer in Nvidia.
I really like the stock. I really like what they're doing. I just
here we go.
I do. You know, it's like, but the thing is like, Nvidia has given you all the cheat codes. Like if you watch the CGT, if you watch all of the keynotes, if you watch all that, you realize like what this is. You know what I mean? And it's like I saw statistic that before 2020, I think it was like the proteins that the scientists were bringing, the number of protein scientists were actually defining and figuring out was like in the hundreds. And all of a sudden, with one leap in AI, it was 200,000 in a year. You know what I mean? So it was like what you get from 100 to 200,000. It was like a 2,000x thing, and this is just on science alone. You know, it's like I've been following like analysis on proteins, even though I have no idea what it means. I remember back in the day with the PlayStation 3, you could leave it idle, processing scientific data in the background, and it would just show up like a random particle just moving around, and it would be like figuring out data. And like when crypto came out, I was like, oh my god, this is freaking nuts, because it's like this is just that but for finance. So it's just able to run the network on the background. And then like nowadays, with the advances that we're going to get, healthcare is going to get really attractive. Healthcare right now, if you're in the right healthcare AI companies, and the thing is like it's so difficult, like that's why I want my sister to come back and start figuring out stocks, because there's going to be some companies that are going to figure out some crazy things, and you're able to just run the testing on just compute. And so I don't think
Sorry,
the thing is
Why do you need your sister for?
Because my sister is a biomedicine major.
Okay.
Yeah, so she did it for a while, and then she got burned because biomedicine is rough. If you're right, you get paid, but if you're wrong, you get punished. And she was like, you know what? Like, I like the way you invest because you're green. You know what I mean? So it's like there's like if you want crazy volatility, healthcare, like crypto is nothing compared to like an approval. You know what I mean? Like approval, like
You mean
3,000%.
pharmaceutical, yeah, but
Yeah.
not
Yeah.
like thermal.
Yeah,
Healthcare, yes, pharma.
more
Yeah.
pharma, biotech. This is super volatile.
Yeah. So that's also like a, so she's like, she was in it, but then, and then, hopefully. But yeah, right now I'm super excited. Like I watch anything. Like you put NVIDIA on the name and I'm watching it. And I'm just like, okay, like what am I missing here, right? How can this work? How can this not work? And it's like this Lexman, the Lexman one was that was like eye-opening. It's like it was as good as the
And what is it?
it was just like two guys talking about like the deep sea AI data centers. How does it go? How big are they? What are we looking for? Who are the biggest? Like the one of the things that they said is like the biggest infrastructure right now is Google. I think the biggest GPU cluster is Tesla's, but Google has two data centers that are 30 miles from each other, that if you combine them both, the compute power of that center is bigger than Tesla. And it's just nuts. You know what I mean? And it's like, I'm excited of what's to come, just because of, if the calculator allowed us to add and subtract, AI right now is giving us access to data that we can't even comprehend. You know what I mean? It's like, and the thing is like, I can tell you, it's like, even in my own processes, right? Like script design from 5 hours of content to like 30 minutes. My brother editing AI, using AI and Riverside. We're going from 10 hours of editing down to one. You know what I mean? Of doing shorts, and like I did and this gives you a little bit of perspective, but it's like I did a contest with a friend of mine. It was a short a day for 30 days, right? And whoever lost $100. Nothing, right? But obviously like there's pride in that, right? And we're like, okay, like we need to post short. We didn't miss a short, but every single day was like 3 to 4 hours getting the script down, getting in front of the camera, getting the teleprompter in, reading the thing, the takes, the thing. All of that now I can do just talking to you guys, giving it to AI, and in 15 minutes I have a post, like a thing ready to post. I grab another thing, put it on there. In 20 minutes I have a video, and it's great.
I think we need to do more volume, like.
It is like, in all honesty, the way that this one is going to work, because I'm trying to work on my brother on, so because we're talking on so many big points, what I want to do is be able to talk each individual point in such a way that we're able to cut it, have the big form content for whoever wants to watch the conversation, but because our audience still doesn't know us very well, getting those short 10-minute, 5-minute conversations into like snippets is gonna keep people engaged, and post them like once a week, twice a week, 3 times a week, and then the shorts in between, funneling all of the people into those. Like that is the strategy that I'm building.
That's a great strategy, I think.
To
work.
So, hopefully we'll see. I have
to jump on another call. This is work related. I'm like 1 minute late to it. I will have to explain what I did.
No.
Yeah, you can watch me live in MarketBot. All right.
It was nice talking to you guys.
It was really good. When's the next one? Next week, or whenever there's like some big thing happening? Yeah.
Well, tomorrow, if Trump wants to wake up on the wrong side of the bed, so.
Nasser wants to do it every day.
It's like I have been so busy. It's like, okay, like he wakes up, tariffs. Okay, we do tariffs. He wakes up, and now China. Now he wants to make a freaking hotel in Gaza. It's like, what are we talking about? What are we talking about? Let me sleep. God, It's like with Biden, it was like, like, okay, we are gonna leave Afghanistan. Okay, great. It wasn't good. Great. That's it. Biden was nice. He was old. Nobody cared. Trump is old and he's like lunatic. Anyways, but this is what we asked for. Every single investor was like, Trump for the win. Trump for the win. Yeah. We're going to age 30 years. We're going to become Biden by the end of the fucking the whole presidency. But
all
yeah.
right, Mr. Akim.
Good to see you guys.
Bye-bye.
See you soon.
Yo.
Bye-bye.
Bye-bye, guys. Whew. All right. I need to fix things. Because this is not my normal Leaf Studio and session for all. Bam. So yeah, if you're thinking of making content, Riverside works. It's great. Sponsorship, I'm down. All right, let me turn this back on. So let's do overlay here. And then we go. Hello, and welcome to another episode of Scotch and Stocks. Market is open. No, we took too long. All right. Markets are open. I need to get out of this trade. I'm not gonna show my screen because I need to do my my logins. Hello and welcome to another episode of Scotch and Stocks. I hope you enjoyed that. I hope you got some value from it. Any questions? Let me know in the chat. Yeah, you see, selling SMCI is selling into the open. Oh man, where is my phone? Where is my phone? I have no idea. No idea. Oh, there it is. Found it. I'm so glad CPI doesn't like get a lot of people in. Oh, markets are gonna be so red. It's gonna be ugly. Let it be ugly. Be ugly. Thing was, the markets yesterday there was some de-risking, so hopefully. Well, that sucks. Everybody hurts. Everybody cries. Well, that sucks. What happens when you don't pay attention to markets, boys? As soon as market open, 40. 40 goes nice, but all right. Cancel the Twitter stream. Turn on the market overview, and let's get out of this trade. All right, let's work, boys. We found a bottom, it seems. Really? That's a weird one. I'm surprised we're not going even lower. 530. We're finding a bottom here, so hopefully we can pull it back up. Oh, that sucks. That would have been a good trade to get in. Problem is like, what do we have? So tomorrow's PPI data, so that might actually benefit markets. If we're talking about, that's one thing that Akeem mentioned that actually might benefit here. 523, we probably come back to 525. I was expecting a retest on those, but we're breaking it. The whole market is down. People are going crazy. People are freaking out. Do I want to leave the trade now or do I want to hold? I kind of want to hold. I kind of want to hold it. I think that we already got the euphoria down. This is probably going to balance off. So usually, whenever we get a drop like this, what is crypto doing? What are markets expecting? Let's have a look at something real quick. SN YouTube. All right, let's go to YouTube. Did Kevin stream? I wonder. CPI. No, I don't want to watch it. No, I don't want to watch it. No, I don't want to watch it. That's a good thumbnail. I have no idea. That one tricky. This one tricky. CNBC. And then Powell is speaking, but he's not going to say anything major today. He's probably going to be all of the same. Yeah, I think we bounce off this. So gotta hold. Man, I want Intel. Man, I'm going to be early on that Intel trade and I'm going to be pissed again. I wonder if he gets asked.
Those were decisions made by policymakers, correct?
Yes.
So it's a little disingenuous to be hear my colleagues talk about how they care so much about inflation when in reality they cause it. But I don't want to continue that. I'd ask you a question just out of curiosity because you worked at the Department of Treasury. At what point did you think they were going to run out of ink? Did that concern you that maybe it was possible that they were printing so much money that the Treasury would have to find alternate ink suppliers?
You have crypto people
didn't occur to me, but good question.
So along those lines, something that concerns me a lot is the idea that we would even look like China in any way. So can I have your commitment that as long as you're the chairman of the Federal Reserve System, that we will never have a central bank digital currency?
Yes.
Thank you for that. I think that's extremely important. It makes me very happy to hear you say that. Shifting gears to a little bit, something that matters to me and entrepreneurs all over the country is why can't I wire somebody money at 6 p.m. Eastern time? Can we get to a 24/7 scenario where wires are cleared every day, all day? I think that would be very, very helpful to businesses all over the country.
So that's coming. It's just coming slowly here. We have that at FedNow. We'll get in touch with you about FedNow. We provide that service between two banks, and others want to provide it too. But yes, we do kind of lag a lot of other countries in that, and it is time for that to happen.
So I know I don't want to put you on the spot, but to put you on the spot, FedNow. I was very familiar with it, but it was a little bit late in coming. Can we get a commitment to do that this year so that by the end of this calendar year, businesses can transact 24/7 and settle payments?
Well, I think they can do that now I believe they can do it now on FedNow, and they can also do it on the RTP system as well. So I think it's available. Let me check in and I'll follow up with you.
That'd be great. One other piece of the puzzle here is what do you think the Fed can do to fight international terror groups, for example, Hamas, Hezbollah, Iran, the proxies that are funded by places like Qatar? Do you think that we're doing enough to keep them outside of the banking system? Because at the end of the day, terrorism is ultimately funded by these bad actors. I met with the hostage families this morning. It was heart-wrenching to hear stories about kids that are my kids' age being held for almost 500 days. The Qataris are obviously completely complicit in all this. What can we do? What advice would you have that we can do to make certain that we bring these terror groups to their knees?
You know, we do enforce the money laundering laws very, very strictly, and but it's a tough question. You know, it's a huge focus in international meetings and things like that. But you're right; it's really hard to nail it down, particularly if it's all happening overseas. But we can do what we can do with our banks. We don't want to make it so costly, though, that they debank people because they're so worried about violating the anti-money laundering laws. I mean, that's some of what's happening, according to the banks, is that they're so afraid that there might be money laundering that they just cut people off at the first flag, as opposed to perfectly legal businesses are being, you know, thrown out because of their fear of being caught doing money laundering. So I think there's a balance there, but no, it's a really, really hard project and one we spend a lot of time on.
Thank you, John.
You know, when
Thank you, Senator
when
Moreno,
hedge funds
the
buy-
patient and persistent Senator Kim.
When hedge funds buy-
Thank you. I wanted to make sure some of my colleagues had a chance to be able to run off to some of their meetings, and I've enjoyed being able to listen to the chairman, to be able to hear some of your articulation here. I just want to share with you, I did a telephone town hall last night, and I'm glad to hear some of my other colleagues as well. And there is a lot of anxiety right now by the American people in trying to understand what's happening and seeing and interpreting what's happening on the news. I guess I just wanted to ask you, if you were, for your words of how you would explain to the American people the importance of independence when it comes to the Federal Reserve.
So I think the point is that we'll make better policy, we'll keep inflation.
All right. I'm expecting this to die off a little bit. Come on, CPI, pump it. You gotta pump it up. Don't you know? Pump it up. Yeah, I watch Kevin. He's great. Oh man. All right. Peace, guys. Peace. Thanks so much for watching. Any other questions? Anybody have any questions? If not, I'm more than happy to step away. Markets are popping. Gotta buy the dip. And force it. Market is booked, but that is okay. We're gonna go up.
Growth.
So I'm very proud to be associated with the people of the Federal Reserve, and I'll give you an example why. When the pandemic hit, kind of out of the blue, and economies all over the world are shutting down, the U.S. Treasury market is stopping to function. Companies can't roll over their commercial paper. Economists are writing about a depression. People at the Fed who went through the global financial crisis 10 years before step forward and say, we got this, we know what to do. Here's what we do with the Treasury market. Here's what we do with money market funds. Here's what we do with the companies that can't get any financing. The markets were closed and companies were having maturing debt that they had to roll over. The people who knew what to do in that pretty dire emergency were working at the Federal Reserve and other places. But I will tell you, it was impressive. And I think if you could have seen the way people react and how hard they work and how much they know and how well it worked, really. Our work during the acute phase of the crisis was very successful. And it's entirely due to the knowledge base that resides with career people at the Fed.
Yeah. Would you say that the Fed is overstaffed?
No, I would say that, overworked, maybe not overstaffed. Everybody at the Fed works really hard. It's a place where people work.
And a lot of this
hard.
conversation right now about staffing numbers at different departments and agencies, it's going back to this sense of the taxpayer dollar, in terms of accountability there. But I guess I just wanted to ask you, is the Fed paid for by the taxpayer dollars? Can you explain to us what the burden is on the taxpayer?
So we're self-funding through our large balance sheet.
So when it comes to the staffing at the Federal Reserve, not coming from the taxpayers, is that right?
Indirectly, we give away all of our profits. We give back to Treasury,
Mm-hmm.
and those profits would be higher if we didn't pay for the Fed. So in fairness, it's ultimately paid for by the taxpayer. But in that sense, we're self-funded.
Self-funded.
Yeah.
Just one last question here. You talked about the different actors that are involved when it comes to levying tariffs in terms of paying that the exporter, the importer, the consumer. You said middlemen could be part of that. I guess I just wanted to ask you, do you know of any way in which to 100% guarantee that the consumers will not have to pay higher costs when it comes to tariffs?
Not really. It's not going to be easy to identify with any accuracy exactly where costs do fall, but I think it'd be hard to guarantee any particular outcome. I think we're just going to have to see.
Great, thank you. I yield back.
Thank you, Senator. Senator Warren, did you?
I do. Thank you, Mr. Chairman. I just want to make a point before we quit here, and that is about law enforcement. If you keep the laws the same on the books, but you fire the cops, you're going to have a lot more crime. That's kind of law enforcement 101. And the problem we've got right now is law in the books about consumer protection hasn't changed. But the cops, at least right at this moment, have been told at CFPB to stand down. And I appreciate that we have state AGs who step in, and often they partner up with the CFPB. But there is no one else for the giant banks who actually does what's called the bank examination, the supervision. And that is so important. Remember the Wells Fargo scandal, where Wells Fargo was illegally opening fake accounts in people's names? You find that through bank examination, not because the person who got cheated could figure it out. Bank of America gets hauled in because bank examiners discovered they were charging people illegally on junk fees. Nobody finds that but the people who are down in the banks doing the bank examination on behalf of the consumers. Look, we tried a patchwork of law enforcement for consumers before 2008. We had all those laws scattered among 7 different agencies, and we saw how it ended. It ended with millions of people losing their homes, millions of people losing their jobs, millions of people losing their savings. The CFPB is our law enforcement agency to make sure that the giant banks follow the rules on consumer protection. And for me, right now, I'd be really worried about doing business with a giant bank when there's no cop on the beat.
Thank you, Senator. I will recognize myself for just one question, and it'll even be relevant to your job, I promise. Mr. Chairman, so thank you for your patience and for being here. I wanted to follow up on there were some questions, or at least I know Senator Rounds asked a Basel III question, and your response was basically, let's get the people in place from the administration, and then we'll proceed again. Treasury Secretary Besson recently said that the banking system is, I believe, said, quote, well capitalized, perhaps over-capitalized, unquote. And given that assessment, or if you agree with it, could you discuss the necessity of advancing a new Basel III proposal, specifically how an updated regulation would impact the ability of the regional banks to compete with the big Wall Street banks, and what consideration should be taken?
I'm good. He ain't gonna say nothing that he didn't say yesterday. Or it's very unlikely he does. Have a look at something. So Crypt Bitcoin is actually finding some floor at 95. All right, let's have a look. Index forward. I know. 15% on eggs. Largest food increase since 2015. Drill, baby, drill. Go Trump. All right. Fruits and vegetables are down. Cereal bakery down. Index food increased 2%. Line with expected. Well, no, that's a month. Month on month. No, over the last 12 months. Okay. So what was the big culprit here? Was it housing? That could be because of the. What happened to housing? Let me have a look at shelter, 4.4%. Oil was down. Gas was down. Energy was up overall. Food at home. Food at home is higher, and that's not good, you know? Shelter and transportation. Ooh, okay. Seems to be okay. All right, guys. Thanks so much for watching. I'm going to be stepping away from it. I think that was good. It's a good episode. But yes. Peace, peace, boys and girls. And boys and girls and boys and girls. I don't think there's any stream tonight, no? Who's having earnings tonight? Earnings hub. We have healthcare. Oh no, I'm definitely streaming tonight. I'm definitely streaming tonight. I want to be paying attention to Reddit and Robinhood. I'll stream tonight for sure. All right. Peace, peace, guys. Yeah, I'm streaming tonight for sure for a little while. Bye. Peace.